So the good news is that nothing terrible has happened so far in 2014. Rates have actually fallen a little bit, and because these funds are very rate sensitive, that means that their NAVs actually appreciated a little bit.
Are munis back? Steven Pikelny sees some improvement in muni land, and after last year's sell-off, the Morningstar analyst says closed-end funds featuring municipal bonds may now be attractive to investors looking for tax-free exposure.
I mean, I wouldn't say munis are necessarily back, but I don't think they ever really went away. They just, in 2013, it was just a horrible year for a lot of muni funds, especially long duration muni funds. And just because things are less bad today than they were last year doesn't necessarily mean that it's positive. It just means that it's less of a negative, I guess. So I think the things to keep in mind are still watch where rates go, because these funds still are very interest rate sensitive. And to also just watch the fundamental characteristics of what's going on in the muni market.
At this point, Pikelny believes munis compare favorably with taxable bond funds, where concerns may be driven more by credit risk than interest rate risk.
Well, I think right now you'll have a better chance of getting some good deals in the muni universe, mainly because of just the construction of each sector, where a lot of the taxable fixed income closed-end funds are relatively short duration, and they kind of get their income from going down the credit spectrum and taking on more credit risk, whereas munis, they tend to take on more interest rate risk. And right now, credit risk is really it's a more popular risk to be taking right now. So for the investors that are willing to go a little bit against the grain and take on some interest rate risk in lieu of credit risk, then I think the discounts for munis are just wider right now.
Going forward, what's the outlook for municipal closed-end funds? It may depend on what happens with interest rates.
If rates stay stable, or if the yield curve doesn't steepen anymore, then these funds will probably continue to do quite well, because they'll be borrowing money at the short end of the yield curve, or at the short end rate, and they'll be investing it at the rate that you can get at the longer end of the yield curve.
If muni bonds appeal to you as an asset class, Pikelny says the closed-end fund structure may offer an advantage to consider.
Yeah, I mean, I think the thing to keep in mind is that if you're specifically looking for muni exposure, then closed-end funds are probably a good place to get it right now, because they are trading at reasonably large discounts, or at least historically wide discounts. So again, if you're actually looking for that exposure, then it's a good place to get it. In some places, it's actually a very cost-effective option to buy the muni closed-end fund, sometimes even more cost-effective than buying an ETF or an open-end fund.
Steven Pikelny of Morningstar, sharing a perspective on municipal bond closed-end funds. For more information and data on closed-end funds, visit our sponsors at efconnect.com, the authority on closed-end funds. Thanks for watching. This is Closed-End Fund News.